Zee Commodity Capsule. This particular week has been incredibly weak for entire commodity complex. Most of the commodities are now headed for their weekly losses, but the worst hit have been the base metals. Yes, London copper is headed for its biggest weekly drop since November, and the red metal has already lost nearly 4.5 to 5% this week. Not just LME copper, aluminium is hovering near its 6 months lows, zinc is near its 2.5 year lows. So what has been the reason? Sluggish economic recovery in China is continuing to fan the worries about the demand outlook. Consumption of industrial metals in the major metal consumer China has been subdued in the second quarter as well, and the inflation numbers and the recent trade data, they are creating a very sorry picture as far as the country's economic recovery is concerned. So there are certain concerns about these particular areas. On the other hand, we have seen copper inventories on LME, they have climbed to 2 months high. So these are some of the factors because of which copper along with other metals have been quite subdued. Similar has been the case with Chinese metals as far as iron ore or the steel rebar is concerned. Both the metals are trading near the 6-month lows. However, ANZ is quite bullish on copper. They see a growth in demand by about 4 to 4.5%, and they see copper being supported due to deficit this year in the market. Coming back to silver, this again has broadly followed all the base metals and industrial metals performance, cracked 5% overnight, and now the metal is set for fourth weekly decline in 5. Metal is down 6% so far this week. Comeback in the dollar index and the broader weakness in industrial metals, as I said, is the prime reason why silver is facing the heat. On MCX, silver has already lost 5,000 rupees in last 2 trading sessions already. Gold has taken a breather. You can say its rally has taken a breather. The prices have reversed all its gains through the week. Yellow metal has already shed $60 from its record high. Firm US dollar is one of the reasons why gold is facing a cap and is facing a pressure. But the economic slowdown fears continues to pin gold prices above the $2,000 mark due to the safe haven demand, which is structurally very high at the moment. City Research continues to be bullish on COMEX futures, and they see gold approaching $2,200 to $2,300 an ounce by the year end. Crude continues to extend weakness. It's headed for fourth weekly drop. It's wiped all the gains that it garnered through the week. Disappointing economic signals from China and the recessionary concerns, which are once again driving the market lower and raising the concerns of demand outlook, clearly seem to be imprinting the picture. Signs of weakening US job market coupled with the renewed banking crisis are all, you can say, haunting the oil markets. Brokerages see Brent crude broadly in the range of $65 to $80 in the coming 1 to 1.5 months. And as far as the global agri-commodity markets are concerned, barring raw sugar, all the commodities are headed to be ending the week in red, broadly 2 to 10% down. Eyes will be on US Department's World Agricultural Supply and Demand estimates. This particular estimate is very important given the fact that for the first time it will be including its 2023 and 24 marketing year forecast. So this is all for this week's performance. We'll see you the next time.